Beating the Market, Part 2, an audio series. It's not just the money that keeps people out of the stock market. It's the emotions, the fear of the unknown, and the apprehension over the drudgery of dealing with stock tables, earnings reports, account statements, and the whole messy scene of financial responsibility. The problem is in the approach. Rather than to see investing as drudgery, approach it as a hobby or a game, monopoly with real money. As your portfolio grows, so will your interest in the game. Soon you'll find yourself trading stocks, hunting for bargains, scouting for hot tips, joining investment clubs, comparing your performance with your friends, and crafting your own strategies to land the next big winner. The more involved you become, the more money you'll make, and the more fun you'll have, particularly during bull markets. No longer will it be drudgery to read through the stock tables and see your picks bounding to new highs, to look through your earning reports and see your companies growing quarter by quarter, and to open your account statement and see your net worth climbing steadily. That's when you become hooked on the stock market. It becomes your pastime for life. Fact. All your stocks will not go up. Tallulah Bankhead once said, "If I had to live my life over again, I would make the same mistakes, only sooner." You will make countless errors in judgment and timing that will cost you thousands of dollars. You will buy stocks that suddenly go down. You will sell stocks that suddenly go up. It's all part of the trial and error of the stock market game. To learn is to lose. But the sooner you start making your mistakes, the sooner you'll start making money. In the end, the law of averages will bail you out. Your own persistence and the market's rocky but inevitable ascent ultimately will conspire to put large sums of money in your investment coffers. The only certainty about the stock market is that there is none. No one beats the market every year. No one hits a home run with every swing. But to succeed in the market, you have to keep stepping up to the plate. Amid your failures will come great successes. The sooner you begin, the sooner you win. Despite the odds, thousands of active investors do outperform the market over a lifetime of investing, sometimes by accident, sometimes through an informed, disciplined investment program. Investing is not rocket science. It's not nuclear physics. You don't have to be a genius to succeed in the market. All you need is an interest in making money and a willingness to stick it out for the long term. If you try, you will succeed. A monkey can do it. So can you. So now you know. Those confident, collected, finely attired stock market specialists on Wall Street Week who seem to have all the answers to probing questions are really just faking it. The emperor has no clothes. The big guns responsible for moving billions of dollars in the stock market are just as susceptible to mistakes as your typical chimpanzee throwing darts at the stock tables. And when the big guns make their mistakes, you, the little guy or gal, can cash in by swooping up the bargains they leave in their wake. Does that mean you should see every battered stock as an opportunity? Not exactly. When stocks fall, there's usually a reason. From an investor's point of view, some reasons are better than others. 90% of the stocks go down for the right reason. We want to find the other 10%. Let's say the market has been moving up at a brisk pace and the stock you're interested in buying has raced to an all-time high. Do you buy it at that price or do you wait? If you're patient, you'll probably be able to buy the stock a few dollars cheaper later. And not because of any flaw in the company or its earnings, but due simply to the normal ebb and flow of the stock market. The overall market and the vast majority of individual stocks within it move in broad, uneven swings. Even in bull markets, stocks' prices are constantly in flux. The market moves up, corrects, moves up, corrects again. Exhilarating rallies can be quickly followed by breathtaking free falls. It's after those corrections, when the market and the stock you're following sink a few percentage points, that you can buy your pick a few points cheaper. As a small investor, you can move nimbly through the market, taking advantage of the overreactions of the big institutional traders to buy your stocks at a discount. If you're relatively new to the stock market, you may find yourself wondering what you're doing wrong, why you continue to have mixed results with your stocks while everyone around you seems to pick nothing but winners for their portfolios. Well, guess what? They're not. They only talk about the winners. Their losers simply don't make it into the conversation. It's just a subject too painful to discuss. Accentuating the positive is human nature. The golfer who shoots 30 over par isn't going to walk into the clubhouse and start talking about his or her game. More likely, that golfer will have a quiet drink in the corner, but take 30 strokes off that score, and everyone in the clubhouse will hear about it. No one wants to talk about their failures, only their successes. So don't get discouraged when you hear your friends boast about their winnings in the market. You're only hearing half the story.